All right, good evening, good evening. This is going to be my first one, so let me mute. Sorry about that, guys. All right. This is going to be our first ITU live stream via Twitch. This will be recorded, of course, for our students in Discord who were unable to make it today. We're going to take a look first, of course, starting with Forex Factories. Let's see what we got going on. Now, I will suggest some folders you guys should look at if you are trading certain Forex pairs, but I'm predominantly looking at what is going to be going on with the DXY and indexes. Those are my children, so I like to trade. So for me, what I'm going to be looking at, as of course important this coming week as we're starting a new month, is Friday we have NFP. Okay, so that's going to be a bulk of movement come Friday. GBP has a lot of movement come Thursday, 4 a.m. We can, of course, see ISM services with PMI on Wednesday, get some slight movement there. If you're trading AUD, pay attention on Monday. And today is a bank holiday for them, so don't look for too much today. Look for how things move and set up for you tomorrow. Euro has a lot of folders, yellow folders going on Monday morning. USD, we talk Monday morning, we'll have some things as well. So I'm primarily this week going to be looking either for some quick pullbacks to set us up for a long-term move. And I'll go over why I'm looking at that later. Now, let's dabble into Market Watch. In Market Watch, we'll see that they are expecting more worse things to come for the bear market. We will also see that most of us still understand the relationship between risk and return, not overvision portfolio, cost of hedging, portfolio against another blow falls to 3-year low and post-Fed rally. That's important. And China manufacturing sectors contracts in July, home sales fall sharply. Okay, so they're having some troubles in the home sales, and we should also see the same thing for our markets as well. Now, more importantly, let's go in directly into the Dow and see what's going on here. So big tech did survive an earnings test, but the predominant of the smaller guys are taking notes, and more so than anything, they're just trying to see what moves they need to make as things get harder. So the Federal Reserve expected more drop, as we saw a few days ago. The White House, of course, lied about the recession, only to follow up later with some information typewritten saying, of course, we know we're still in a recession. We're down 2 quarters in, and we're going to the 3rd quarter of a down quarter. So we're locked in, man. Recession is here. It's here to stay. We'll just see how long with inflation going up, things of that nature. And of course, in the NASDAQ, we are looking at the stock market had its best month in years. We're not out the woods yet. Actually, of course, we're not. We're also expecting oil to rise back up. So you guys be careful as we go into this again. Based on the news, sometimes back in the day, you could trade the opposite of news and be successful. But as we go in times like this, anything is still definitely possible. But per the chart, you'll see why I believe we may start seeing some reversal coming soon. And maybe not, especially with Nas. Nas has some pretty unique things on the chart. Let's look at fin screening real quick. Nas is expecting a lot of sales this week. Strong sales for Activision. We have possible more negatives. We have 2 negatives back-to-back in history so far for since Airbnb. Advanced Micro Devices, AMD, looking for a strong buy. EA sells. See, all our techs are struggling. We knew PayPal's been dropping for a while. Starbucks is dropping. Burger King is dropping. eBay. Like, these are big companies to be expecting sales as this week goes on. And we'll take a look at why in the charts again shortly. Now, the Dow did not have a lot. We are looking at sales on a Amgen Inc. And then, of course, the Caterpillar company. We see positive throughout history. Now, of course, I've been seeing a lot of construction going on, people moving around. So Caterpillar has definitely got some work going on right now. Let's go take a look at the Federal Reserve calendar coming into this coming month. So foreign exchange rates and things are 415, but of course, I just want to get straight to the nitty gritty. We're looking at assets and liabilities, commercial banks, 415. Looking at consumer credit, we're looking at selected interest rates on Friday, which is normal. We look at interest rates every day, mostly, but Friday is going to be heavy. I'd love to see how this plays out this week. It'll set us up for the entire month. Now let's get into the charts. So for DXY, as you'll see here, and I can just temporarily hide this. We've closed with a strong shooting star on the monthly. No wick to the downside. I'd expect this to definitely either be a pullback or a engulfing come this month. And this is why I'm partially still bull bias on the indexes. Let's dive into this a little deeper and down to the weekly. You can see we're coming off of a engulfing candle followed by another bear candle, signaling sellers are coming in strong, especially for a higher time frame like this. We're starting out now on the 31st with a pullback. Now, of course, the monthly will cross over again and make a new candle here. Oh no, we are. It did do it for today. Okay, cool. So that's respected. And what I'm going to expect here on the weekly is a simple pullback within this weekly candle. If we take a look at the daily as well, we can see the crossover. You know, it struggled here for a while in its consolidation before continuing the drop. We come down to the 4-hour. Now, it would signal some people that there is nothing more to do. I think this wick isn't going to be left alone. I do believe we will come back up, and that is why I'm looking at the hour here with this imbalance to be filled, which you will see, bam, there, and that'll be the golden zone to see possible drop to continue. I'm expecting us to come down and meet. Let's go to this. Sorry. And meet this possible support level. Before continuing up back up to the upside, a drop like this will give the indexes a little bullish room to maneuver if need be. But we also can meet the trend line that DXY has been expecting here since March. Nice bullish cycle there. And if we look at the overall, this is also a beautiful support area here. And you know what, let's just, let's see if I can extend this. Let's just use this one and set that there. All right, so a nice retracement to this level would be very nice to see a continuation if things continue to get worse with inflation. Going forward, as we can already see, they're lying about the recession. So no surprise to see things get worse over time. So I'm looking at US 30. I am expecting this pullback, as we can see, is currently already happening, and possibility before our engulf closing here. The significant resistance level. So we'll see if this will be a continuation situation to the top side after a simple fill of this imbalance to continue, or we go look at the daily. If it is strong enough to close out the day as an engulfing, we'll just see it continue to tumble from here, and I will consider this to be a lower right leg for the double top here and here. And this is a significant level for your boy. Oops, sorry, I don't need that. So let's see, it's resistance here. And we can see that is a level of support that gets hit pretty often. And if I could get the most hits on that would be great. And it's not bad. It's not bad. So you can see the respect there, the close below, boom, rejection, boom, comes support, boom, 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 holds support again. We come through, gives you an inverted on it, comes up, double tops, finally breaks through. We can see it struggled here. We can see the struggle above here, and now we're coming back to meet that area. So if this bullish move is strong enough to break the level, we'll see that happen. And NAS as well, same thing. See the daily close pretty hammerish, but we have the wick on the top side. So I'll definitely see if this closes out in the day as an engulfing. That'd be great to see, and then we'll see that retracement come back up to fill. If that's the case, we will see more downside off of NAS. Otherwise, and we'll see a 4 a.m. It's kind of be a double top, as we can already see here. Well, we'll see possibility of this double top here. Go ahead and mark that off. If it holds cool, if not, we will definitely see this continue to the top side. Now, my main reason of seeing things continue, I'll hide this here. We can see we did just get a monthly cross. Okay, that's not a good look for NAS. We have the monthly starting out already dropping a low wick here. So there's more than enough possibility for us to continue downside movement with a strong setup like this on the higher time frames. All depends on how it plays out. Now, it did engulf after meeting this imbalance. US 30, on the other hand, did meet its COVID low. So as you can see, that lines up there perfectly well. We got the wick hit, came up, did not give us the engulfing though. If it decides to cross at this level, we'll see that continue to drop. But without the US 30 cross, I'm a little hesitant there. So for the most part, we would definitely like to see how these candles play out at those support levels and resistance levels. So we're taking that into consideration on US 30 and NAS. Same with SPX. That does have the lower time frame imbalance to meet its support level here for possible continuation. And like we said with DXY, if it strongly respects that monthly close, then it will engulf this month, and we'll just start to see more downside movement in breaking these levels. It's not a strong sentiment with a candle close like that on a monthly. So I'll be watching this through the week for those of you guys that are already in the community. Of course, we will continue to drop what we see coming. So you guys are ready and available and able to capitalize on what's going on. If you have any questions, of course, feel free to hit me up. I want to thank and welcome everybody who's taken and tuned in for this session. I'll see some of you guys throughout the week and as we press on. So thank you guys. Talk to you later.